Hello, good afternoon, ladies and gentlemen. My name is Sasha. It's a modern investing program on IBM TV. And starting today, we are going into a new format of a 30 minutes show. And of course, it's difficult to cover everything. If you have any particular questions for us to address maybe next week, send please your questions to IBM TV. Modern investing, and we will try to cover that. And right now, I would like to introduce my long-time participant in this program, Peter Bennett, with his financial advisors. Welcome to the show.
Hi, Sasha. These are
Hi,
my
good to
financial
see you.
advisors. This is Talia
Okay.
and this is Julian. And I
Oh,
decided
wow.
that they'd be good financial advisors because if you look at Wall Street, you look at first of all brokerage houses, they tend to vastly underperform under many periods the S&P 500. As a matter of fact, once I
Mhm.
saw a study that showed that it had all the listings of all the brokerages, and during a period where the S&P got like 60% or 80%, whatever, none of them even made a profit except for maybe one or two of them. And then also, they mutual funds tend to underperform the S&P 500 because you have fees and they can't really do it. Sometimes in some periods, at least the mutual funds do better, maybe even the brokerage houses. But now I've decided that these two are going to be my key advisors. So first, I'm going to ask Julian for his advice. Go ahead, Julian. What
Go
should
ahead.
we do?
Buy.
Well, that's really interesting. Okay. Then let me ask Talia what her advice is.
Sell.
Oh, okay.
Okay. Well,
Okay.
that's really good advice. Well, but I'm going to have to weigh those out. But thank you, you two.
You should sell more.
Sell more. Exactly.
Buy more than
Okay. Bye, kids.
buy.
Thank you. It was a brilliant advice. In fact,
Thanks
all
for
you
your
have to
help.
do
You're
Peter,
welcome.
all you have to do is to select stock to buy and select stocks to sell. That's all what you have to do, and you will do very well with such an advice.
Right. Well, their advice is just as likely, just as good as some of the other advice you get on Wall
Absolutely.
Street. Everybody's doing crazy things with meme stocks, and so I thought they'd be good advisors.
Good, good. So, how market looks to you these days? It's a kind of challenging situation in the market right now. On one hand, there is no other place where the money could go but in stocks, with this outlook for low interest rates in the foreseeable future. On the other hand, people are getting nervous that there was no meaningful correction for the last year and a half or so, at least 10% or higher. And the longer the situation remains, the more chances that we will run into a correction of 10% or more.
Yeah,
What do you think?
yeah, I agree totally. I mean, I've never seen it more of a war between two sides, which is why, in the end, I don't think the market's going to move a lot in the next maybe 6 months or a year. I think there'll be some volatility because there's really two camps. I mean, there's the fear, as always, the fear camp and the greed camp, and both are getting to extremes in a way. I mean, on one side, you have fear. The obvious thing is the Delta variant. First of all, now it turns out we're going to need boosters, everything. And so there's some fear from that, and it might affect travel for a while more, and it's going to slow things down more. But, I'm a long-term investor generally. Sometimes I do the trades too, but I want to either buy very long-term option positions or very long-term companies that pay dividends that will pay a lot or grow. So I'm not too worried about the Delta variant. I mean, it's possible everybody's going to now. They're saying take boosters every 8 months, and there is studies that are showing. Unfortunately, the CDC said it today that the quality of the vaccine degrades. So after a bunch of months, maybe it's 80%, then it's 60%. So it means basically, unless we can get rid of it, which I doubt, we're going to have that. But the bigger thing is there's a fear of inflation. And so the market's been going up. As a matter of fact, it hit an all-time high 2 days ago, the S&P and the Dow. And that's because on one side, it's always positive and negative. The positive is the there's more cash on the sideline than ever, and treasury rates are this month you can get a whole 1.26 up for the 10-year in a taxable account possibly, or 1.92 to put it your money, tie up your money for 30 years, where you get killed if there is inflation. So there's no alternative. People have so much money on the sidelines. On the other side, there's fear of inflation, and some of that is grounded because first of all, the rates have been drifting up in the last week or last 2 weeks. They've been drifting up a little bit. Well, no, I take back. They've been coming down, but the fear of inflation is real, and a lot of people are saying there's going to be inflation. So the PPI was up a 5 point something percent. Sorry, I didn't make two mistakes. The CPI, Consumer Price Index, was up 5 point something percent. And so that wasn't terrible considering coming out of COVID. But the PPI, Producer Price Index, was up almost 10%. So if you were looking at that, if that was really a long-term trend, you start getting concerned because that's going to squeeze companies. It's going to squeeze consumers. There's a lot of potential inflation in the works. There's a lot of energy inflation in the works potentially. I think the oil situation is the markets are getting tight in oil. Natural gas demand has been going up a lot. And so there's a lot of inflation fears that are probably justified. So I think it's going to hold the market down. And I wouldn't be surprised in September, October, we have some kind of little mini crash. But in the end, I think we'll work through it. So that's my take on the market so far.
Yeah, excellent. Yeah, I totally agree. And I would add also that October, November are usually vulnerable time for
Yeah,
investors
exactly.
because of seasonal factors, or so to say. But now we are still in August, and August looks very nervous. And September is not the sweetest month either. You know,
Yeah,
you
that's what
know.
I'm saying. It could be very rocky September, October. I mean, the
Hmm.
thing is, I look at the stocks individually, the fundamentals. Everything is so high, even the dividend stocks. I've never worked harder to find one company. I actually found one this week, and so I'm putting a little bit into it. It's a safe company with over a 3% dividend, around three, and growing. But I'm not going to put a lot in because there's certain aspects of that, but it's so much work. I'll look at 1,000 stocks and I'll say, and I'll just decide I don't like the sector, I don't like the companies, because everything's so high. At half the price, I love it, but right now things are so high because the market and everybody, all the retirees, were desperate for income or capital gains, whatever. Everybody's adjusting to the fact that we're in a low interest rate environment. So, and I don't think we're coming out of it a lot. I think we're going to see a blip. In other words, maybe we'll get to 2.5% Treasury yields. Some people think we might get to 3 for the 30-year, but I think it will drift up in the next 6 months, and people are going to get nervous about it, and the market will probably go down a bit. But again, the interesting thing is it's financials that have been leading the way, which is why the market's so high. That was the number one sector last week. And
That's a good prediction.
well,
It's a
and
good
yeah, well, that
prediction.
tells you right now the market thinks it's interest rates because banks and insurance companies and everybody needs higher rates. The problems are two. One, I still think the office market is the black swan, the next black swan, or it's a black swan that's very likely. It may not destroy the banks, but it's going to cause a lot of damage. My example this week, every single week since the last 6 months, I see these articles. Last week I talked about Zynga, which is giving up their headquarters in San Francisco, and 10 other companies in San Francisco that are writing down their office leases. But this week, State Street, major mutual fund carrier, decided they're going to close their office in Rockefeller Center. Close it. They're going to let their office workers go home. So it's everywhere, and all you have to look at, and this is a nationwide and a worldwide phenomenon. But I love to watch New York City because they're one of the lowest, in terms of the office vacancy issue, or worst. But so in June they were 20% vacancy rate. In July 1st they were 21, and then August 1st 24%. So they're barely climbing back. I'm sorry, the occupancy rate. So their vacancy rate is almost 80%. Their occupancy rate went from 21 to 24% in a month, and it's if you even follow that out. So what is it going to get to? 30, 40, 50? I don't think it's going to get up there again. And it's going to be devastating to New York and San Francisco, for one, but even everywhere, even offices in rural areas in other countries all around the world, you're going to have major issues, because what are you going to do with abandoned buildings, basically? And also the tax bases are going to change in many places. And just an aside, I had a thought this week because I own one industrial REIT. I haven't discussed it, but it's logistics. So a company like UPS, and it's not UPS, but a company like UPS is going to do okay, or a company that maybe services them. But there's also many industrial REITs that have small manufacturing in there. But let's say you're a big office building in a rural area and you can't get any tenants at all. What are you going to do with that? Well, you can convert to residential. It'll cost a fortune to overhaul it. You can turn into a medical office REIT, which was why I wouldn't touch it at all. That's the easiest one. Hang up a sign. Oh, we're a new medical office REIT. I wouldn't touch those in a million years now. But also, you could also say, we're going to be light manufacturing. We'll move, some of the manufacturing. We'll give half the cost or 2/3 of the cost to a small manufacturing company. Well, you can't be as logistics, though, because that's difficult unless you've got the whole building, because you need to be able to have open spaces, and it's just a whole new format. But any use they can find for these things, whether it's residential or industrial, manufacturing, they're going to be desperate. They're going to be going crazy, and the banks are going to be hurting, and the insurance companies. So I don't think it's going to be devastating to them, because I looked at the percentage that they own. The banks are maybe less than 10% of their assets are in industrial loans like that. I'm sorry, office loans, but it's not going to be good for their balance sheets. They're going to have
That's
to.
true. And Peter, I don't see that there would be a lineup of companies to take occupancy at the Rockefeller Center anytime soon. And
No.
I don't think logistic company can locate in the Rockefeller Center either.
No, you're right. You're right. You're right. I said in rural, you're right. If you had a rural office building, maybe you can convert to that. Rockefeller Center could turn into a medical office, some of the space in a medical office REITs until they don't need it anymore. But what are they going to do with all that space? When I walk in New York City in 5 years, what is going to, or anywhere though, but it's not New York, it's any city or anywhere around the country almost. What's going to be in those buildings? Are they just going to be vacancy signs, bankrupt, bankrupt, bankrupt?
I think Rockefeller Center, it's a great location. I think if they will open their casino, they will do very well.
Well, you're right. They should open a casino there, but then you're right. New York is probably going to legalize gambling. They're going to be so desperate they won't have a choice. Yeah, just like cannabis was legalized. Any sin, it doesn't matter. They're going to be desperate for money.
I think any economical activity generating some
anything.
I think it should be welcomed these days. I don't think you have a choice to restrict something that hardly even doing any sizable business. So you have to actually encourage people to get into some viable businesses. It's if you have facilities to manufacture and sell arms, why not to have a casino at least instead?
Well, possibly, yeah. But again, you're not going to do that in Rockefeller Center. But I mean, some of them. But it's a fortune to gut these buildings and turn them into residential. But they may be their only choice. So but there's a huge demand for expensive real estate, obviously, in a lot of places all over, because it's so expensive now because interest rates are so high for places to live. So it may help some people in New York, but their tax base is going to get devastated. I mean, look, if an office worker doesn't commute into New York, as an example, but again, it's all over. They won't get the New York tax rate on that, and plus that, in San Francisco and Dallas has very low rates, but these are just the tip of the iceberg. I mean, even an office building in a rural setting, they're going to be competing for those tenants who still want to work from um, the office. But the thing is, the other side of this is the employers are going to be competing for the employees, and the employees are going to say, Joe down the block will give me the same amount of money and I can work from home.
Exactly.
And a lot of employees have already shown they'll take 5 or 10% or 15% even less to work from home.
Yeah,
So
Google is doing that these days.
yeah, I
But,
saw that. Yeah.
Peter, with the issue of Delta variant, it hasn't been resolved at all. We don't know really what's waiting for us, and that maybe weighs on the markets as well, because there is a lot of uncertainties. Like even 2 months ago, there was a belief that coronavirus with vaccinations and so
I
on
know.
is well behind us, and now it's very uncertain at the best. So that probably affects the mood of the market participants. And okay, now a few words about gold and cryptos. But before we'll do that, let's have a short commercial.
Okay.
Okay, thank you.
I welcome all of you to IBM TV and to this show, which is Dr. Dhawan's live chat, and I'm your host, Dr. Sanjay Dhawan. I'm an eye surgeon practicing in New Delhi. The live chat is a show which talks about any and all aspects of life, any subject, anything that concerns the life or it improves its quality is what we will be talking about. How to plan for it, how to prepare for it. So we'll be talking about all of this. Looking forward to seeing all of you every Friday night, 9:30 p.m. to 10:30 p.m. Indian time. Thank you. Bye-bye. Namaste.
Yeah, it's great. But well, we have to worry about our financial health a little bit too. And so here about gold and crypto, as we discussed last week, it seems to me that there is a little bit of a migration of capital from gold to cryptos. The gold is not performing really well at all in the last few weeks. In fact, it's even not so gold so much itself, but the shares of gold producing companies, they are moving basically down, and that worrisome because they probably anticipate the lower prices for gold. Maybe there are some other reasons, like I mentioned before. Now, with cryptocurrencies, I can't figure out one thing. Of course, with all due respect, it's a very risky asset by itself. I can't figure out how it would work. Let's see, there are about 7,000 different cryptocurrencies. Of course, Bitcoin is the prominent one, Ethereum, there are a few others. Let's see, there will be a consolidation, and there will be, say, 20, maybe 50 current cryptos left. So let's imagine that the company, let's see Tesla, for example, Tesla is accepting Bitcoin, or it was trying to accept Bitcoin, or it's still accepting Bitcoin. I'm not so sure, but let's see they are accepting Bitcoins. What about other cryptos like Ethereum and Dogecoin and some other things? So are they saying that, okay, we are accepting this type of cryptos, but we are not accepting other cryptos? So how that would work? Why people would be even have a reason to buy other cryptos beside Bitcoin? How do you see it, Peter?
Well, first of all, I see all the reasons not to buy any of these, and it's interesting what you're saying, which is true. I held 3% in gold just in GLD, and I have 2% in silver essentially through options. I sold 2023 options on silver at around 54. And there's no premium there, but as a hedge and whatever, I think silver has potential because of solar, which uses a lot, and EVs, which are going to need a lot of
Yes.
solar. So I'm not, in the long run, I think silver will be fine, and I keep the money anyway from the premium in the meantime, which I use. But in terms of cryptos, oh my gosh! First of all, as you said, 7,000 of them, but um, the uh, the end game is not pretty for these, probably. First of all, I saw a comment today in one article, or this week on one article, and it was really, really good. They said the U.S. has to eliminate this, that they can't allow it. And it's so true. I've been saying it, but I see it even clearer now. Look, the US is the world's reserve currency, and that's one of the advantages the US has. The US has a few advantages. We used to have more, but they're slipping away a little in some senses, like because of the politics and chaos and everything. But we're still a hugely advantaged country. That's why people want to migrate here. So, the thing is that if we lose, no country can do well if they lose control of their monetary base. They don't know who to tax. They don't know who's doing criminal transactions. I mean, the whole thing is crazy. So the U.S. has to do it. The Chinese already figured this out. They have a digital yuan, which is another reason the U.S. is going to be pressured to do it, by the way. They don't want China, of all people, to dominate the digital world. But the digital currencies can do the same thing, basically, as the other cryptos or the stable coins. So why would you want, to have that if you had digital currencies? So it's inevitable. Now, the other interesting thing is inside the Senate bill, that's now the infrastructure bill, and I don't have the new details because it was just updated a bit, but I think it's still it's very harsh for cryptos. Last I read the specifics, inside that bill, there's $28 billion worth of tax revenue for the government. How are they going to get it? They're going to say you need to record your cryptocurrency transactions and you need to pay taxes on them. So they think they're going to get 28 billion. They might get zero because if everybody leaves the market, but that's what they need to do anyway. And I've always said they're probably going to tax it out of existence. So anyway, so I heard there was a revision, but my guess is they were going to tax the developers too. And I think the tax, which was ridiculous. So I think the amendments are probably just saying if you're a developer, you don't have to record it. But once you sell it, put it in the market, actually transact a transaction, then you have to record it. So now, wait a minute. Why am I holding crypto? Because it's I have to record it. I'm going to get taxed on it even worse. If I have $1 and I spend it, I don't get taxed on it. But if I have a crypto and it goes up, I get taxed on it. So the whole thing is and it's probably going to go through. And why would you want such a dangerous asset? Not to mention I'll just mention one other thing. The environmental concerns are huge. And of all the stocks, everybody's like ESG now. Okay, where you care about the environment. They care about the oil companies, but they don't care about Bitcoin that uses 86% of the world's energy. And then they make an argument, oh, we'll use recycled energy. We're changing to that. Well, wait a minute. If you're using recycled energy, recycled energy could be used somewhere else instead of coal. So the whole thing fails on ESG, fails on government intervention, fails on the future, and it still may go to $1 million because it has no value at all, and it's just a Ponzi scheme that can go anywhere.
Yeah, Peter, I agree with you that basically the price of all cryptos, but let's see, Bitcoin, the most prominent one, the price is basically based on the agreement between buyer and seller because there is no other value that there is one.
Exactly.
However, you mentioned the miners of cryptos. That's very interesting thing is because if people want to create some kind of an asset, so you cannot print dollars, we know all that. You cannot print gold. You have to actually buy a gold mine and develop it and so on and on and on. Here is a crypto that almost any person with not even big access to capital, some reasonable finances available, you can start working on cryptos. And from what I understand, you can break even in few weeks time and then you can generate profits.
Sure,
and that probably attracts a lot of people. Yeah.
The 7,000 actively traded cryptos. and
Exactly.
and,
So
and it doubled from 2019, and it doubled from 2017. So every 2 years they're doubling. So at this rate, there would be 14,000 cryptos in 2 years. It's a great business. Print, it's legally printing money. But there's no moat, there's no fundamentals, and there's a lot of danger. So it could go anywhere because, like I said, you could. There's no
but I
value.
don't understand that. Let's see, you decided, or okay, no, you are not going to do that, period. Let's see, somebody talk me into, okay, invest some money and we will start a new crypto, okay. So we
Right.
start 7,001 crypto, and we bought equipment and we start proceedings and so on. And let's see, we manufactured, let's see, 100 new cryptos in a matter of say, months and a half, right? Okay. So now I have this 100 new cryptos, and what my next move? How do I actually
Sell them to
make money?
everybody will buy them. Just keep. You know what? But I won't be buying any. And you can. There's PT Barnum. Although you look, it may still go to $1 million, but PT Barnum is sucker born every minute. So that's what probably will happen. I can't say definitely, but I say probably. But I think we better move on because with the new format, we're
Yes,
staying to
exactly.
30,
Okay,
30 to
let's
40
let's
minutes.
yeah,
I think
let's
is
run
our
a little
limit.
commercial and then we'll end after that.
Another commercial? Okay.
Okay, if you have one.
Yep.
And Guidry goes, let's go look at something that took place 40 years ago. Who cares? Okay, that's political.
Okay, we were talking slightly mentioned the dividends paying stocks, and if the situation will go into, so let's see, 10% correction or so. I think that the high-paying dividend stocks are not immune at all. Actually, they will probably go down. Maybe not as much as overall
Yeah,
market, but they
exactly.
will go. If overall market will go 10%, they will go down 4 or 5%. I don't think more, because there will be ultimately a lot of people who will start looking at the high-paying dividend stocks, and maybe that would be a very good time to add to the positions and have even more. That's what I'm looking at, and. Now about options. Options are looking more and more attractive because you can use them in advancing market and declining market just as well. What are you looking? What type of options are you trading these days?
Well, it's too hard for me to call right now the markets in short-term options. I'm all long, but I did reduce my options positions a lot because I was controlling the last 2 or 3 weeks because I realized the market's getting toppy, and I had so much control of when you looked at Amazon on alone in terms of the percentage of my portfolio, not in terms of the movement. In other words, I was hedged, so it wasn't like I could lose that much money. But the amount of options, I was controlling 20% of my portfolio just in Amazon.
Mhm.
Another, 7% in Microsoft. Delta, I had been up, to maybe 10%, and those are the three I like, except for silver too. Because my general concept is if I'm going to go long, I want to know this company's going to be there, and sooner or later, take Amazon. First of all, I still love it, and now it's down. It went down a lot from 3,700 to about 32 something. But the thing is, let's say in 2 years, I've kept the money and it stays flat or just barely goes up or goes down. I could just resell it the same option again, and in 5 years or 10 years, it's going to be this way. But I wouldn't be surprised if it's over 4,000 in 2 years. But let's say it just drifts around, then soon, first of all, I'm keeping the money and I invest that. But also, eventually time is on my side. It's a chess
Yes.
game where you have move after move after move until you win. Same thing with Microsoft, although there I'm only at I sold 200 options. So, but basically I got a huge premium, maybe $50 on it. And, so it's not that I don't think Microsoft will go higher than 200, but because of the Amazon at 4,500, it's kind of,
300.
those are the options I sold. It's sort of a hedged strategy because I'm thinking if the market goes up, because they'll move together more or less, Microsoft and Amazon.
Yes.
If they all go up, I'll make a ton on Amazon. If it stays flat, I'll make a lot on Microsoft. So win-win. And then Delta, you know what? I'll just write it out. I think it may be 2 years, 4 years. Eventually, people are going to return to travel. They're not going to stop. The business market. I heard from a friend they had conferences. Not as many people going, but people are not going to spend their lives not flying. They're just building up, their vacation budgets and their desire to travel. So, you know what? I'll just roll in 2 years, Sooner or later, people will be getting their boosters every 6 months, or they'll decide, you know what, I need to travel anyway. I don't think it's going to hurt them in the long run.
No, I
And they're
think
already making money, by the way. They're not losing money. They're cash flow
amazing.
positive. So
That's amazing.
even in this market, so every improvement, whether it's in 6 months or a year or 2 years, every improvement is, going to now add to the stock price. It was at 60 or 70. Now it's at 38 or 40, I think today, 39, somewhere in there. So it's getting back, because they're a winning airline. They're hiring 1,000 pilots next year, and people who are getting older, the retirees are going to want to fly.
Absolutely.
And everybody's going to want to fly. I mean, people
I
want
think
to.
if you will take these classes as airlines, hotels, and cruises, I think airlines are definitely the first one who will start to recover. Yeah, hotels should be okay because people can drive to some destinations and stay in hotels, so that should be okay too.
Except for the debt. Some of these hotels are, if they keep piling on debt, because they are too vacant, that's going to hold them back. That's why I like Delta, because it's not just that I like airlines, but also like the fact, like the cruise ships are piled on tons of debt. They issued shares. They're getting through the crisis. But the thing about Delta is, if you're cash flow positive today, then it's all uphill. It's all free from here. It's an easy road from here.
About the cruise lines, I saw a picture. I forgot in Business Insider or something else. There was a picture of facilities in Turkey where they take Carnival cruises ships apart. They're taking all the valuables like grand pianos, for example. Then they're taking the furniture, they're taking the china, they're taking all valuables.
So they're taking the ship apart. Are these they're old ships though, right?
Well, how old? I don't know. There were three ships which were.
But if they're good ships, they're not going to. They're probably older ships because you know what? Because if Carnival's not, they can mortgage their ships, but they're not going to get rid of an old ship. Listen, it will return, but who knows when? I mean, people are going to be more reluctant to get on a ship anyway. I had plans. We were going to take a vacation to Hawaii next year, and then go somewhere else. But I'm going, wait a minute, that place is closed. And I don't want to book my trip and have to put the deposit down, and then also even the idea of wearing a mask on a ship, I don't mind if I go someplace on land wearing a mask because I have to wear that everywhere. But to be on a ship with a mask and, who knows how long we'll be wearing masks. So it's the only travel company I really like, although there's, it's not the only one, but it's mostly the only one I like. There's a small one I've mentioned before. I won't get into it now, but it's a Canadian airline company paying about, I don't know, 7% dividend, something like that. And they just basically ship cargo up north. So it's very safe. But and I think we better get into dividend stocks because we're going to keep the show now, the audience, to 30 to 40 minutes for you.
1 minute.
Keep it tight.
Okay, 1 minute. What about dividend stocks?
Okay, so I was going to mention a new company, but I decided to save that this week because I added again a natural gas. Because first of all, I read, this alone tells you everything you need to know. I read that, I'll quote this article. It said, conservative estimates are that natural gas liquids, which are basically liquid gas, basically,
Yes.
uh, will expand at a 6% compound rate until at least 2027.
Oh, wow.
But I always sensed this, but now I saw it because, look, if you're a utility and you have to generate energy, you're not going to want to be using coal.
Mm,
So, and coal has been about a third of the U.S. market. In some countries, it's even more. In some countries, less. But coal is the one that you want to get rid of first, then oil, then natural gas. And solar is not going to power everything. There's a lot of issues in how fast it will expand. It is going to expand, but the forecast for natural gas is to increase through 2040, 2050. So this is a utility, basically. But this is what I call the last of the Mohicans, because you can make money on options, but this is the only sector where you can get huge dividend yields safely, in my opinion, in natural gas pipelines.
yeah, and it's
So
still, environmentally speaking, it's still the friendliest
yeah,
process.
it's very
And
good. And plus, like a company like TRP, which is one of my favorite, I increased that to 7%. Um, and they're actually working on carbon sequestration pipelines now, so they
mhm.
can make even more money. But you look at these companies and compare it to the S&P. So they all have dividend yields of 6 to 13%. The only one that's low is 6% is TRP, which is phenomenal in today's market for anything else. But TRP doubled its dividend from 2000 to 2010, doubled it again in 2000 to 2020. Next few years, they've already promised 7 to 10% growth, and they're going to keep growing through pot. So I'm looking at my portfolio. I'm going, I put this one in my IRA because if you have it in an IRA, you don't have to pay the 15% dividend tax.
Great.
And I actually put it in my Roth because I feel this is one of the safest things. And I'm looking at, look, I'm getting 6% now. In 10 years, probably get 12% on my money. In 20 years, I better be alive. I'll be getting 24%. And in 30 years, which I'm hoping to be beyond that, then I'll be getting 48% on my initial investment if it keeps growing. And it has that potential. So then
And
you look at MPLX, 10% dividend.
yes, very
MLP,
solid.
USAC makes motors that push natural gas. 6% dividend. I'm sorry, 6% is what I have there. I'm just a little nervous about them because they're near their leverage ratios. But since their cash flow is about 13% yield, in other words, cash flow, price over cash flow, they're actually earning 13% of the cash flow. It's a good, solid business pushing the gas. They have to push the gas or people want to heat their homes. So, but the only nervous is if they ever had a dividend reduction, but I probably should have gone more. And I even increased AM to 1.33%.
Excellent. What's happened to me? I still have. I didn't do any trading in the last several months on my high-paying dividend stocks. The only thing is, some of them are not classified as high dividend-paying
I
stocks
know.
because the stock moved so much higher. Like Pfizer, when I bought it, it was paying about over 5% dividends. Now
Yep.
it's a 4 at the best, maybe even less than 4 as we speak, because it moved now north of $50 a share. When I bought it,
It's very tough.
at
Yes.
34, so it was a different story altogether. But it's a quality stock, of course, and I have a few others I still like. GDV, it's Gabelli Income and Dividends Funds, and I still have Enbridge, of course, and some ugly stocks like mm, Altria Group and then similar. So I'm trying not to mention that because people don't like
Yeah,
to
some
buy this.
people don't like it because I know
Yeah,
I don't usually buy the cigarette stocks, but I don't think they're probably good investments. But I do own a mutual fund, the RHS,
sure.
where I have 10% of my portfolio. Now it's only
Mhm.
paying 1.5% because the market. It used to pay 2 when I bought it, and it looked good. So, but you know what? The dividend stocks. I mean, the thing is, so we get appreciation if we ever
Yes.
sell, but I don't want to ever sell, especially given the replacement. I mean, now I can get almost zero, in 0.4%, I can get an American Express or, lock up the funds forever to get 1% or 2%. So I'm not selling because I'm hoping that a lot of these companies dividend and even 3% looks good now. But when you're going to pick a new stock out, it's very tough. I'll tell you next week about a company. It's in a safe company. It's got a 3% in the food industry.
Excellent.
We're running out of time, but we have 3% dividend. So I'm putting a little bit in this company, to add another consumer staple, but it's got a solid 3% dividend and growth. So
Excellent. Peter, thank you so much for participation. It was a very good
of
show
course,
today. I hope people like it. And we'll continue next week. Thank you very much, everybody.
okay.
It was Modern Investing. And from IBM TV, goodbye and have a great week, everybody.
Bye-bye.
Bye-bye.